Hello everybody, in this video I'm just going to briefly be going through some of my changes I've recently made to my portfolio. As you can see here, I've invested for a little bit over a year now, and right now I'm at about $24,700. And although the Robinhood account has been open for almost a year and a half now, I really just started to add a lot more money to the Robinhood account at the beginning of this year. And I just wanted to start off by showing you some of my top holdings. Tesla is about 45% of my portfolio, which I'm sure is terrible from a diversification standpoint, but it's really more of a tech stock in my opinion, and it's going to continue to grow and grow and grow for years to come. They're leading in autonomous vehicles. They're leading in battery production, and not battery production, but battery technology. And in a few years, they'll be leading in battery production. And they're approaching leading in the industry in manufacturing and operations as well. And they're just going to continue opening gigafactories all over the world and become bigger and bigger and bigger for at least the next decade. So that's kind of just in less than a minute my opinion on Tesla. Then there's also Microsoft. I added a few more shares because I thought their acquisition of Bethesda Studios or ZeniMax Studios was really, really exciting for the world of Xbox, which is owned by Microsoft, and they're just really good at gaming, or a really good gaming company, which most people don't really think about. And I'm really just kind of sharing my opinion on the company, not going to be getting into the financials at all in this video. And then Google, something people don't really think about is that over 80% of all the phones in the world are Android, which is owned by Google. And if you think about India, they're still an emerging economy, but the users in India, as well as a lot of other markets, are still emerging, and they're going to become more and more valuable, and Android's going to continue to make more money, whereas Apple, I think, eventually will kind of plateau, but that still kind of remains to be seen. I also own a few Apple shares, so definitely nothing against Apple. And here's a few more I wanted to talk about. So I loaded up on my Carnival and Royal Caribbean cruises earlier this year. I added a lot more shares. I had already had a few shares beforehand, but I added more shares in March and April, and I'm still holding them, and I'm probably going to be holding them for over a year. And the repercussions of the pandemic are just going to hurt them long term for years to come, whereas the repercussions of the pandemic on these gaming companies like Take-Two Interactive and Activision are the opposites. A lot of people have been playing games for the last 6 months, and they're going to want to continue to buy new games from the franchises that they've really enjoyed during the pandemic. So the repercussions for gaming companies is actually positive, whereas for the cruises, it's going to be negative for a long time. So kind of opposites here in my portfolio. And here, circling back to Tesla, I just wanted to share what my market position is. So as I said, about 45% of my portfolio, average cost of $251, which used to be much, much lower. It was around $180, I guess, before the stock split. 24 shares and about $10,500 market value, up 75%. And it was about 110% before I added a few more shares after the split. And here you can see my portfolio in the last year, it's up 31%. But if you just take a look at it since March 18th or 23rd, whatever day the market was at its lowest, and you take out my idle cash and my money tied up in limit orders, then my portfolio is actually up close to 60%. So pretty happy with my performance in my portfolio. And that's definitely dragged up by Tesla, don't get me wrong. And next up, I wanted to show my diversification according to Robinhood, which is actually kind of funny because Tesla makes up the majority of consumer goods and manufacturing materials and is actually not included in tech, and I consider Tesla to be a tech company. So in reality, if you take into account that Tesla is a tech company and not so much consumer goods and manufacturing materials, although it is, then my portfolio is about between 80 and 90% tech, so definitely not diversified. And I've told myself multiple times that I'm gonna not buy more Tesla shares, but it's just the most exciting stock to me right now. And I'm very aware that it's not very well diversified, but you gotta invest in what you're passionate about. I just made a video about a month ago showing all of my different positions and my average cost on those positions, so be sure to come and check that out if you are interested in that, and I'll probably make another video similar to that in probably a few weeks, so subscribe for more content, and thank you so much for watching to the very end.